We are just over a week away from the U.S. presidential election. Joining us now to discuss how things may play out and what it could mean for the markets, Christian Medeiros, VP and Portfolio Manager for Asset Allocation at TD Asset Management. Christian, great to have you back on the program.
Thanks, Craig.
We're getting awful close. Of course, time always marches on, but I think it's a little closer than some people are thinking. Where are we right now in terms of the odds on how this is going to play out?
Yeah, great question. So what we've seen since August is essentially a 50-50 race in all the betting markets. But what's happened since about October 5th is we've seen a bbig divergence start to arise in the betting markets, and really it's only continued to widen since then. So from 50-50, we're now looking at, in the betting markets, about 60%, 65% in favor of Trump. So why has that happened? A lot of it is a big shift in the polls. Not huge, but enough to make a difference. So you've seen Trump's odds, both in battleground states as well as nationwide, improve by maybe 1% or 2% in his favor. And so we're still really close to 50-50 in the polls, but Trump's slightly ahead in all the battleground states. So as a result, the betting markets have moved accordingly. I think they moved a little bit more than the polls justify. It's closer to 50-50 than 65, but that's where we are today.
All right, now only a week away and then some, and 50-50 in the polls. Let's start running down some of the scenarios, because this is really the exercise now. If it's too close to call, what are the scenarios, what it can mean for policy, and then what it means for the markets? Exactly.
So the most likely scenario, given that he's leading the polls, is that Trump sweeps. And the reason why it's a sweep is because the Senate odds are very disfavorable to the Democrats. Not all of the Senate's elected every election cycle, only a third of it. And the ones that are available are not. It's mostly Democrats trying to defend seats. So it's very hard for them to pick up. As a result, the Republicans likely pick up seats. What this means is that Trump has a good chance of controlling all of the legislative body, and then therefore he has more control over what policies get enacted. There's 4 things that matter in this election. One is taxes, trade, immigration, and then deregulation. So we can jump into any of those.
Yeah, let's start breaking them down then, because obviously if it is a Trump sweep and we're talking about tax policy, there's been some interesting things floated during this race.
Yeah, so investors are probably getting most excited about on the Trump scenario on tax and deregulation, and that's what helped him in the 2016 election. That's what got markets very excited in those first year or two. What's different this time is there's less wood to chop. This time he has to extend the taxes that he cut in 2016. He's promised more cuts, but can he get that done through Capitol Hill? That'll be a big question, because the price tags here are quite hefty, between $4 and $7 trillion. So that's on the tax side. And then on the deregulation side, he prefers not to have new regulation. He prefers to roll back regulation. And so this is something that financials, to a lesser extent energy, and just general corporates would be happy about. It's a less of a regulatory burden and more chance for mergers and acquisitions and other capital expenditures.
Right, those are 2 of the 4. Let's run down the other 2.
Yeah, so the other 2 are more negative. So on the trade side, he's promised very aggressive tariffs, 60% on China, and then 10 to 20% on the rest of the world. From looking through his trade advisor Lighthizer writings and books, it seems more likely that China and the European Union would be singled out, as they have large trade surpluses with the US. And it's hard for them to really come to negotiated terms on these issues. So we do think that he would pursue tariffs and trade wars against both China and the EU. So that's a threat, not just to those countries, but it would be a hit on US growth when you look at a lot of economic modeling about what this would mean for the United States. And then the last one is immigration. He's promised to deport many people, which would obviously be very disruptive to the labor market, and also shut down the border for new immigrants. And if you have less flow of people, less population growth, that is also another hampering on growth. So those would be 2 negative policies that we would need to watch for. And it seems like the market's not as actively pricing those, as it's unsure when that would happen in his first administration.
Right, so that's the Republican sweep scenario. Of course, elections can always give us surprises. What if it's a Harris win, but the House is split? How does that play out?
Yeah, it's very likely if Harris wins, the House is split, because the Senate is so hard. In that case, it's going to be very hard for her to pass any new tax or spending initiatives that she mentioned on the campaign trail. So as a result, it becomes more of a status quo. It'd be pretty similar from what we've seen under the second half of Biden's administration. So there'll be a rolling forward of some of the tax cuts, but they probably won't roll it forward for those making above $400,000 a year. Some of those tax savings will be plowed back into a child tax credit and some social spending. So the net fiscal impulse will be pretty much flat. We don't expect her to do much on trade beyond what's already been done. We don't expect much on immigration, so really mostly status quo.
Not much on the immigration file from the Democrats. I think it's entered their campaign a little bit more, but you would see more of a status quo thing if they take.
Yeah. Over the last 6 months, we've seen less and less border encounters as they become a little bit stricter on the border. But we don't expect like a wholesale change in immigration to take place if she were to win.
All right, so the vote is on the 5th, which is just Tuesday. There's a good chance we might go to bed Tuesday not knowing. Good chance we'll wake up Wednesday morning not knowing. If we get into a point where we're in recounts, we're in delays and naming a winner, how does the market take that?
Yeah, so If it's not very close, if we have, the polls are a little bit off and maybe it's 1 or 2 percentage points in either direction, we may actually know on election night. But if it's very close, like it's looking in the polls right now, if it's within, I think 50 basis points in most states between the two candidates, there could be an automatic or potential recount. But we've looked into it, and there's a lot of really strict deadlines that have to be followed, where they do need to recount by a certain date. They do have to certify the election results, and then the electors have to vote in December, which the Electoral College meets and they vote on the candidate. So there's a lot of deadlines. A lot of the courts are prepared for challenges that might take place, and all the electoral systems in each state have really reviewed their policies. So it could take a while if we do end up in recount territory, but there are systems in place. We think it will be a volatile and intense period, but we think that it will be resolved by the deadlines that have been outlined.
Volatile and intense period. From an asset allocation point of view, do people just buckle in and say, I realize this is a big risk event and there's going to be some volatility, you just have to live through it until we get to the other side?
Yeah, ultimately a lot of people have already been putting on election hedges.
Yeah.
So vol is actually quite highly priced for the election period. So people are already putting hedges on. And so what that means actually, beyond worrying about the volatility, I actually think we could have an interesting effect where if we do find out the election results on the 5th or soon after, it actually might be a bit of a market clearing event because people have overpaid for insurance, volatility will decline, that uncertainty will be gone, corporations will be comfortable investing again as they have some policy certainty, and investors will be willing to step back into the market. So I think regardless of outcome, there's a decent chance that the whole event passes over, and it actually is quite positive for risk assets as that volatility and concern eases into the background.
Yeah, let's talk about that. I mean, it's been months and months and now weeks, and now we're right on the cusp of the U.S. presidential election. Once it actually passes and we get a result, I've had people tell me before, ultimately, who's in the White House isn't as important to the market. I mean, there is important policy, but not important overall as just the state of the economy, the state of corporate earnings. Yeah. What do you see once we get past all this in terms of how the markets have been moving?
Yeah, exactly. I think that's really important to point out is that underlying growth is very strong in the U.S. GDP now has been around 3% all year long, so that's a nowcasting of GDP expectations. Inflation's meandering lower, which is supportive, and the Fed's on a rate cutting cycle. So a lot of the backdrop is quite positive for risk assets, positive for U.S. growth. There isn't too many risks on the horizon other than the election, so I think when that does pass, it is pretty positive. And we have seen in a lot of transcripts companies saying that they're holding off on investment, hiring decisions, just because they're uncertain about what policy might look like post-election. But once that event passes, and that opens up their ability to make those decisions again. So I think we might be looking at greener pastures on the other side of the election, but of course, we have to get through the uncertainty, get through the risk of recounts, and potentially a tense situation. But once that's done, I think there's a lot for investors to look forward to.